You know who the presumptive Republican nominee is, but political uncertainty, from tense meetings on Capitol Hill to battles between Bernie and Hillary, could very well be the reason we're now seeing volatility in the stock market. Charles Schwab's $2.5 trillion woman, she's got that much client asset under management. Ann Sonders is the Chief Investment Officer and Strategist.
I can't take personal credit for the $2.5 trillion.
You know what?
I'll give Chuck most of that.
You.
Okay,
Why
thank you.
Your premise is that political uncertainty causes market volatility, or is starting to.
I think it will be a factor, yes, because this is obviously a unique election in terms of what it has wrought, and I think we're now at the point that we have two presumptive nominees. We now truly get a sense of what the policies are that will be under debate between now and November. So I think investors can start to at least attempt to figure out what it means for markets. There's lots of factors behind volatility, not at least being Fed uncertainty, but I think the election season is creeping in as a factor.
Don't you find it fascinating? Today, for example, the market, Stuart Varney actually did it brilliantly this morning, where he was saying, we're waiting, and we had the picture outside of the Republican National Committee offices in D.C., and it has to weigh on the minds of investors at a certain point when there is uncertainty about the political landscape as to what the market's going to do. But is that a mistake to allow those headlines to affect the way you invest?
Well, I think letting any headline affect how you invest, you know, one of my mantras is panic is not a strategy. So I think that that's always a cautionary tale. But I think the problem is that there is such a rash of uncertainty already as it relates to where we are in the economic cycle, Fed policy, what it means to come up off the zero bound and unwind all of these extraordinary measures. So you're adding into the mix just another component of it. I think if everything was hunky-dory and we were in silly season of the election cycle, I think it'd be a little bit different.
Do you like the U.S. here, or do you like emerging markets where there is some risk? I mean, we know the Brazil news where the president is not in the chair, at least at the moment. We know what's going on in Russia. There are 20 million in poverty, but those may be some attractive investments right now because they're cheap.
So we have what we term a neutral rating on both U.S. equities and international equities, inclusive of emerging markets, which is not a bearish position, but it represents a stay at your normal long-term strategic allocation. And that's going to vary, of course, depending on whether you're on the conservative end of the spectrum or the aggressive end of the spectrum. But with volatility, there's opportunity to rebalance. So with that in mind, what I've been telling our investors, at least as it relates to U.S. equities, is don't get greedy here. Okay. Volatility on upside gives you an opportunity to rebalance back down towards your normal weight. And that would be the same advice we're giving on the emerging market side.
It's great to see you.
Good to see you too,
Don't
Liz.
get greedy. That's always a good one, isn't it? Ann Sonders of Charles Schwab.